Hello again.
Hey,
Time for some more small plates here with Eric and Tim. So today, or this particular session, we're moving on to discuss something called the purchases budget, or what does it take to get the resources in necessary to make the production that we talked about in the previous budget. So one of the first things you'll notice here is that we have this phrase resource units. Resource units per finished unit. Now, Eric, that seems like a lot of units. What's the difference between those things?
the, for finished units, that's what we just computed under our last small plates. That's
Okay,
our production.
so that's my production budget,
Yep,
and it has to be finished because that's what I'm going to sell.
right.
Okay, so then what's this thing?
That's how many units of resources we need to create that finished budget.
Okay, so whatever my product is in this particular problem, it's going to take 4 yards of material to make it.
Yes,
So you can think of a finished unit as either a completed unit, or you can think of it as 4 yards of material.
right.
Either way. So that's kind of our setup. Make sure, right, that they distinguish between the two kinds.
Right.
Now, tell me again about which units are for the production budget.
The production budget is the finished units,
Okay.
and the resources are like your direct materials or whatever labor, whatever you're converting, your prime cost basically.
Okay, so that's a good point. So I could also have one of these budgets for labor.
Yes.
You know, especially if I was in a service business, if I'm at McDonald's and anticipate selling so many hamburgers, I would probably need somebody there for a certain number of hours
Yeah.
to meet that expectation.
Right. Right.
So
They're not quite on the honor system yet.
No, not quite. Yeah, not quite. They're close. They're not quite. It depends on the cameras. So at this point, you also have a way that you tend to talk about these purchases budgets relative to the production budget. You say they're similar.
They're very similar. Mechanically, they almost are identical. The two major differences that we have is the resource units per finished unit.
Okay, so you're saying that's where we talked about that 4 yards.
Right.
All right. So I need to know what those are going to be.
So for every unit that we produce, we need 4 of those yards.
Okay, so from our production budget, is that where that comes from?
Yes.
Okay, so from our production budget, we get these numbers, and you're converting them into these kind of resource units required. So if I'm going to produce 5,640 finished units, I need to have, in terms of resources,
22,560 yards.
okay,
of
so
goods.
that's kind of the key piece here, because in this budget we're always talking about the raw materials,
Yes.
and not the finished unit.
Exactly.
Okay, so at that point it kind of kicks into what we've already seen, right?
Right. Our ending inventory requirements are at 50% for this resource, and remember that's not a static number. So
Oh yeah.
in our previous discussion, we had a different ending inventory requirement. So depending on what budget you're using, you as a manager will determine what your ending inventory requirements will be. The other key is that your ending inventory requirements are based only on the resource units required, not on the final production.
Oh, okay. So this is my number. I'm going to apply that 50% to this. So just like we did last time, we have my ending inventory requirement based on next month's production.
Yes.
Okay. Now this is 50%. And so that has to be 50% of my next month's production requirement.
Yes.
Okay. And so make sure you get this conversion so you get these numbers. Don't apply. A common mistake you see is applying that 50% to the finished units.
Yes.
Is that right?
Right.
Don't do that, because then you're going to make us grade harder. So
Yeah.
don't do that.
Make our lives easy.
Yeah. Now, one other thing about that we tend to talk about in terms of this ending inventory requirement is that's a measure of risk, because greater uncertainty in the process is going to mean we need greater inventory levels. So a rule of thumb that you can follow is the greater the risk, the greater the inventory requirement, because it's a buffer against uncertainty in the process.
Right.
So then if you take us through these mechanics like we've done before, you've got the ending inventory requirement. You've got the 1120. And how did you get the 1120?
Now remember, the ending inventory on July 31st becomes beginning inventory on August 1st.
Oh, that's right. So this would go down here. So I'd have the 10,080 here. Okay.
So if we take that same thought, then we know that the beginning inventory on July 1st
Okay, this one.
was the ending inventory on June 30th.
Oh, so I get another one of these kinds of things, and that's also going to be 50% because if I had June up here, my ending inventory for June would have been that 11,280.
Mm-hmm.
And so it becomes my beginning inventory here. And then once again, throughout this, you've got your inventory equation to get that thing filled in.
Correct.
So those are the pieces in terms of how you do this. So if you think about reasons why people will get this wrong, what are the 2 or 3 things that always come to mind that students, where they might make a mistake?
The biggest thing that I've seen is they don't do the conversion. The students will base their ending inventory requirements on the total production and not the resources required.
So number one, they've got to do the conversion correct.
Yep.
Number 2, they've got to apply this ending inventory requirement to the amount of material or whatever resource they're buying instead of the amount of production.
Correct.
And then what else might come back and get them?
If they are not given the beginning inventory at the beginning of whatever quarter they're using, that tends to just freak students out a little bit.
Danger.
Yes.
Okay, so we got the 3 things now. And so since we told you the 3 things, these are all learning objectives. So this is not a surprise. These are things that are going to wind up on your exam. So make sure you're ready for those.
We're not psychic, but we see this in your future.
Yeah. Maybe some Wednesday or Friday in the near future, somebody will walk up to you and say, hey, what was beginning inventory? And you'll go, give me something harder to do.
There you go.
So anyway, that's Eric and Tim one more time, and we'll be back with our next one on cash collections. Yippee!
Bye.
See ya.